The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 17th, fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's make sure we have a great weekend out there. Thanks so much for spending the week with us. Let's go take a look at one of our tools. This is the tool I call, you might want to get a pen, a piece of paper out there. This is the tool I call life's rules that I've learned along the way. Rule number one, we will learn lessons. Simple as that. 4 important words. We will learn lessons. You know, we are all enrolled in a full-time school. It's called life on planet Earth. Every person and every incident that occurs, that happens to us, is our teacher. Every person and every incident is our teacher. Rule number 2, there are no mistakes, only lessons. You know what that means? That means failures are the stepping stones to success. What a way to live. Rule number 3, a lesson is repeated until learned. Just think about it, folks. It's just the way it works in school, right? This is our school. A lesson is repeated until learned. Something to think about. You know, lessons are presented in various forms until we have learned, until we've learned that lesson. And then, and only then, guess what? Do we go on to the very next lesson in life? Number 4, if we don't learn easy lessons, guess what? They get harder. That's right. Pain happens to be one of the ways that universe really gets our attention. Don't let that happen to you. Number 5, we'll know we've learned a lesson when our actions have changed. Only action. It is only action that turns knowledge into wisdom. And in reality, it's massive action that makes the difference, folks. Number 6 out here, others are only mirrors. You know, we can love or hate something in another, but what that does is just reflects back to us what we love or hate in ourselves. You know, our life is up to us. That's another rule. Our life is up to us. Life provides the canvas. Guess what? You and I, we're the artist. Even if you draw stickmen out there like myself. The answers, folks, the answer to life is inside of us now. Tommy O'Brien tells us that all the time. It's the truth. All we need to do is look, listen, and trust out there, folks. Those are the rules that I have learned along the way. You know, we tend to forget all this, but if it's written down, we can remember it at any time we wish. Well, let's go check out the lessons in the markets out here right now. Futures. Dow futures up about 18 points, so they should open down just a few. They're trading out at 16,342. S&P futures trading at 1837 right now. It's up about 3/4 of a point. NASDAQ futures are flat. Russell 2000 basically flat out here. The U.S. dollar index up 11 ticks. It's trading at 81.14. Big movement in the Great British Pound. We'll take a look at that stock chart. Goldilocks up $9 right now. It's trading up at 12.49. Silver up 23 cents. That's up a little over 1%. It's trading at $20.29. Light sweet crude up 62 cents. Natural gas back in nickel right now. A quick peek around the globe. Let's see what we have out here over in Europe right now. A flat market out there. The DAX up 7, FTSE up 4. Over in Asia last night, a little bit of a mixed bag. The Shanghai was down 19 points. That was down 1%. You know, we've been waiting. I've been watching the Shanghai because it has formed a potential buy pattern. Well, it has not confirmed. You know, we've been waiting for the confirmation. We most certainly did not get that last night. The Hang Seng up 146 points, and the Nikkei really flat. It was down 13 points. Our call-in number is 877-927-6648. Give us a call, folks. Be happy to take a look at your stock chart. You know, slew of earnings out here after the bell last night. Intel, they're disappointing. They're trading down over 4% this morning. Trading out. Looks like last trade fired off at about 25.38 out there. Let's see what else is down here. You've got United Parcel down 3.5%. Let's start off. Let's take a look at United Parcel. They closed at 100.49. They're trading out right now at about the $97 mark. Now, a $97 mark is going to take out the now, if you're watching this on Tiger TV, I've got the UPS chart up on my screen. We're going to take a look at a couple. First of all, was there any indication that UPS might be topping? That would be the first question. Well, if we put up one of my favorite tools, I've shared this with you. These are important tools because they do identify topping patterns in the markets. And what you're going to see out here on my screen, this is a set of the Rhodes Momentum Indicator tools. If you'd like to learn about these, if you'd like to be able to apply these to your trading system, go over to the homepage of TFNN.com. Take massive action. Do it right now. Sign up for Mastering Probabilities. Got a 30-day unconditional money-back guarantee. So the only risk to you is not taking action. Not a good risk. If you take a look at the UPS here, you can see it was forming that price relative strength divergence pattern all the way up along the way ever since the, let me actually get my crosshair out here, ever since the date of November 5th when it made a high out there. It made a high of 100.67, a little bearish engulfing candle the very next session out here. But along the way, it has been making this topping pattern out here. Got a real good indication as we came back on January 2nd. And really the market, if you take a look at the ES Mini, you take a look at the Dow, it shows a similar pattern out here. If you take a look at this chart, you can see the red area. The red area on my chart, as soon as you get to that red area, that's when you start entering the sell mode. So the mere fact that, there were indications, several indications inside of UPS that it was in a sell mode. You could just, and because the most fundamental law out there when it comes to trading and investing, whether you're taking a look at momentum type indicators out there, the most fundamental aspect of trading is technical analysis. It absolutely is. I spent a lifetime. Look, folks, I'm a bean counter. I say that with pride. By age 21, I was a licensed CPA in both Florida and in Michigan out there. So I've done my time in the detail world out there. You need somebody to adjust your balance sheet. I know most of those tricks out there. I can read the fundamentals of a company. Go read the MD&A inside of a 10K out there, and identify some of the potential weaknesses or maybe what they're really saying out there. But the most fundamental aspect of trading and investing is really what are the stockholders doing. That's why you want to be able to learn the tools of being able to read a stock chart out. So UPS was giving signals. I'm sure there's other signals out there as well, but it most certainly was giving signals before today's big drop here. We're going to see that the sellers have been in control really ever since that trading session of January 6th out here. Now as we take a look, we'll come back. Where is UPS likely to fall to, and where are the areas that serious damage can be done in UPS? Well, if we come all the way back here to the lows in October of 2012, November of 2012, I've got the little rising price channel out here. So if we take a look at that price channel versus a trend line, in the case of UPS, not much of a difference out here. We're just simply using co-located opens and bodies, opens and closes. That means it doesn't really matter to us whether it's an open or a close, either one. And you're using the body of the candle. Why? Good question. It's because the body of the candle is the essence of price. Those extremes, those shadows, those wicks on a candle are nothing more than that extreme emotion out there. So use the body of the candle out here, and you can see that thus far, with regard to where UPS is traveling to, it's still going to be inside its rising price channel. It's likely going to take out the latest swing point here on the way down. That's a January 14th low. Well, of course it's going to take it out. It's already well, I can't say of course. Anything can happen between now and the next 14 minutes out here. 99.63, though, is the January 14th swing point low. Looks like it's going to trade below that, probably with volume. There is a volume bar out here. It's a little downdraft that UPS had back in July 12th. 2013 was down with 15 million shares. Hey, look, if UPS comes and it tests any part of that bar, it's going to break that rising price channel. That will not be a good thing out there for UPS. So that's what's going on. I suspect that what we will see is we'll see the bottom of the rising price channel here get tested first. I can't tell you what the exact price, because it's going to depend upon which day it hits, but it's in somewhere in the 93-ish range out there. If that fails, well, then that high volume bar will be the first place that it heads to. That's right around the price of $85.49 to $87.50. That is on UPS. Let's go take a look at Intel, INTC. Let's go see what it is doing. In fact, let's just go check a look. How about that? Let's go take a look at the Rhodes Momentum Systems out here. INTC is the ticker symbol. Let's see if there was any indication out here. Nothing other than a shooting star a couple of days ago, but that was right before a little rising window out there, so I don't see anything here on this chart per se. So let's go take a look at the other chart, and we'll go see where Intel is trading into. I know it's out here. There we go. So we got Intel. Last trade fired off at $25.38. So where's $25.38 going to take us to? Well, the last swing point out here. So not the last swing point that it's dealing with. Actually, it's trading just below that. No, it's just above that. That's the January 9th area. So not too shabby so far. That swing point's got 21 million shares. The low of that is 25.25. If it busts through that, then what Intel here, that old resistance line really no longer support that little rising window since it was fixed. That's the black horizontal line going across my screen out here. And let's see, did Intel form a little butterfly pattern? Is that what it actually did out here? Let's take a look at that and see what the expansion of swing points was. See if that way. Oh, my goodness, how about that? It did form a 1.272 butterfly. That's getting the confirmation. So when you take a look at a butterfly or Gartley pattern, you've got basically 5 different outcomes. One of those outcomes is the dead cat bounce. That's 25.12. Looks like that's an area that ought to get attacked here. A close below 25.12. That's going to bring into play the 23.89 level. And that will be inside of Intel right now, trading out at $25.36. Some other damage being done in the markets here this morning. Well, to the upside, you got the Lumina, ILMN. They closed at $125.25. They're up about $10 right now. Silver Spring Networks, that's the big dollar loser. Closed at $23.50, trading at $17.90 right now. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Talk about some island reversal patterns that we have seen here in the market. There are some beauties out here. I mean, we're now take a look at the Silver Springs Networks. SSNI is the ticker symbol. IPO from looks like late March of last year. Now they provide network platform solutions. Says that enable utilities to transform the power grid infrastructure into a smart grid. Well, this is not what you like to see on a stock chart for sure. This had an IPO back on September 13, 2013 out here. That day went from a range of, looks like about 2064 to 2249. Makes a nice move up here. Makes a high on August the 2nd. Between August the 2nd, it gapped up from the August 1st trading session. The high of the prior session was 2803. The low of that gap up was 3103. Trades inside that area of that gap up all the way through August 13th, and then boom, kibosh out here. Real big move to the downside with some accelerated volume. That was on August 14th. Look at that island that it created out here inside of Silver Spring Network. You never want to see, if you're in an equity, folks, and you see that, that is about as large of a sign to get out of Dodge as you possibly can get. Well, guess what it's going to do? It looks like, guess what it's going to do here this morning? Right? Well, it may do that this morning. Let's just say it may do it. 2350 is where it closed. Last trade fired off at 1775. Now, it's got another gap out here. There's a gap between October 30th high, which was 1851, and we'll take the low that we see in this equity here during this entire island. This is a chain of islands that it has created out here, and that's the low from November 12th, which is 1901. So it is potentially, if I draw the line out here, right now it's trading at, I say, 1775. Can't say that is. So at 1775, it's right about right about in here. Here's my black, this little black line if you're watching us on TigerTV. So it's about to create another huge island out here inside of this equity, stranding passengers all along the way. This is this stock chart is nasty, very nasty looking. Of course, the island reversal of island. You talk about a chain of islands out here. That has to be Best Buy. We took a look at that yesterday, and this has formed one huge island reversal pattern. And so the question is, is that the nail? Is that the nail in the coffin? Will Best Buy go the way of the Circuit Cities out there? I have no idea, but I can tell you one thing. It doesn't get much more bearish than those two patterns that we just took a look at. Likewise, if in fact those patterns ever get taken out, meaning to the upside, meaning that, the shareholders' price, what have you, they actually get taken out, it has just the opposite effect. it's probably one of the stronger bullish signs out there because it was able to take out the most bearish pattern that is out there. Don't know whether Best Buy will do that. Silver Spring Networks, it's got its work cut out for it to do that. New Skin Enterprises, that's trading down again today. They closed at $84.80. Right now, it's trading out at $80. Let's see, is that going to be? Now, this will not be a exhaustion gap, that is for sure, because the other gaps have been very large. Yeah, so that's really not a gap down or anything. It's just trading inside of yesterday's candle session out there. That was on New Skin. Now, to the upside, let's take a look at some positive action out here. ILMN is the ticker symbol, and that is going to gap up this morning, or should gap up. It closed at 125.26 out here. Its last trade just fired off at 135. Let me see where that's going to take us back here. Now, Illumina. Boy, this thing came back to an original breakout area, formed a little hammer candle on October the 9th. That's what you like to see. Here's an equity, breaks out July 24, 2013, does it with 4.6 million shares, comes back with 2.2 million shares, and forms a hammer candle right inside that open window, which is a support line with a hammer candle. That is a beautiful trade if you ever see something like that set up. That was at a price point of $72.77. That was all the way back on October 9th, 2013, and it's off to the races again here. So everybody inside Illumina Inc. is enjoying it there at the party. I did mention that the biggest movement inside the currency market this morning was the Great British Pound. Let's go take a quick peek at it while we can. You know, this is a currency pair we want to follow out here because of its longer-term breakup. But let me get rid of that. Take a look at that wide-ranging bar here. I don't know what was behind the move. Doesn't really matter. This was at 5 a.m. this morning, but that is a wide-ranging bar. Of course, we've seen a few of them inside of the Great British Pound U.S. dollar. The key here, though, is really this pattern. This is the weekly pattern here for the Great British Pound U.S. dollar. We want to watch it because it is one heck of a consolidation out there. And if it does break through, you're talking about seeing about $1.80 out there. That means things will be on sale for all of the Brits. 877-927-6648. That's if they visit the USA. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got flat markets, folks. The Dow is down 4 points, S&P off 2, Composite down 10 points out here. Russell 2000 off 70 cents. Apple down 5.60. Microsoft off 20 cents. Google off a couple of bucks to the upside. Lumina leading the charge, up 8.5%, up 10 bucks. BlackRock up $4. American Express up $3.46. Pioneer Natural Resource, PXD, up $3. Were they out with numbers? I was waiting for that to pull back a little bit further. We'll have to take a look at that. Now, I just see an upgrade alert out there. Twitter up about $3 right now. Skyworks Solutions up $2.48. PPG Industries up a couple of bucks. To the downside here, we got Atlas Air Worldwide off 17%. Elizabeth Arden, RDEN, down 18%. Silver Spring Networks off 25%. Apple down $6. Corp off 3. United Parcels off $3 right now. Capital One Financial down 3. Google off 3. VMware off a couple of bucks. Our first caller, let's go out to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you this morning?
Good. How are you?
Excellent. Thanks so much for asking. You wanted to take a look at natural gas. Tell me.
Usual, yes.
Yes.
Tell me what I'm doing. I've got nothing, and I'm just wondering if there's an entrance, or if that would be not a good idea.
Well, let's take a look at it. Let's take a look at it. We'll take a look at 5 different charts out here. We'll see if we can help you to figure this out. First of all, if you're watching us on TigerTV, folks, the upper chart that we're looking at on your screen, on my screen here right now, is a weekly chart for natural gas. Shows that it's in a nice bullish trend here. It's in the yellow section. The yellow section is really just a caution sign. Says that it's pulling back out here on a weekly basis, but no real damage or anything like that inside the daily charts. No, it's a continuous contract I've got on my screen. I need that in order to be able to get enough historical data to do all these paint colors and different signals that I've got on my screen out here. But so far on the daily and the weekly charts, it's looking pretty good out here. Now, yesterday was quite a wild day inside of natural gas. If we take a look at some shorter-term charts out here, and that's what I've got on my screen here right now. Now, this is actually the February contract, Lou, that we're looking at, and I've got the 120-minute chart and the 30-minute chart on my screen. So on the 120-minute chart, we can see that we are seeing it move into what I'll call the red zone, not like in the NFL. This is not the kind of red zone that you like to be in. This is a red zone where we can see that the sellers have got control of the market. Now, of a little bit of a concern here is we had a hammer candle that occurred right about the 10 p.m. time frame here, and we are down below that hammer candle. That took place right around 6 o'clock this morning, and so that's never a good sign when you see a close below a hammer candle. So these little green signals on my screen say it's too early to try to take a trade. The 30-minute chart here down below also showing us that the sellers are the one that are in control. They have really been in control here ever since about 11 o'clock in the morning back yesterday. So really in control at this stage. So it's too early. Now let's go take a look at some retracements out here and try to get a feel for maybe where where natural gas might be moving to. So let's go over and take a look at one of our other commodity charts out here as soon as I can find it on my screen. There we go. So we'll get the handy-dandy tools out here. So is that already helping you a little bit with regard to what you should do as far as the trade? Like right now is not the time. Okay, so we're good there. Now, if we take a look at just normal retracements off of the last swing point, which was January 10th, up to the high that was put in yesterday. The areas that you want to be paying attention to, first $4.28 on a continuous contract chart is where you've got your dead cat bounce, your .382 retracement. So you want to see if that area here holds as a support level. Reason being is because you had really a nice wide-ranging bar on January 13th out there. So I suspect that that's going to be the first area. Or your ideal buy is really coming back into the .618-ish area, right around 416, maybe the low of that bar on January 13th, around the 411 range. And you'd like to see, and you'll know if it's going to do that, Lou, if it closes inside that January 13th bar, $4.31. But right now, when we take a look at and use the momentum signals out there, the momentum says on the 120-minute chart, on the 30-minute chart, that it is absolutely the sellers that are in control of this. And you want to wait for the momentum to be able to shift on that before you would even venture in. And what that would take here right now, that would take the minimum, that would take a close above a session that we're in right now. That high is about $4.36 out there. And that would require a complete reversal, which can happen. But right now it is the sellers that have control of natural gas. I hope that helps you.
Yes, it does. Are you looking at the February contract?
It is the February contract. If I put the March contract up here, I could do that in a heartbeat. We'll just take a look at the 120-minute chart as well. And, it's also showing this is really the same thing. The sellers have been in control of this ever since it really made its high at about 9 o'clock yesterday morning out there. Even though we saw some wild swings, it was really the sellers in here that have taken control at this stage. So just wait for this thing to, test those areas that we were looking at and then go from there.
Okay, great.
All righty.
Yeah.
Hey, you bet. Thanks so much for calling. You have a great weekend.
Yeah, you too.
And folks, speaking of weekends, Monday is a off day for us, at least here in the U.S., celebrating Martin Luther King Day. So we'll be back with you on Tuesday out here. So we've got a little bit of a holiday. And if we go back and take a look at let's go back and take a look at gold and silver, light sweet crude, as long as we're in the commodity sector out here. If we take a look at gold, actually looks pretty good. Now, you'd like to see it get above 1255.30. Getting above 1255.30 would be very, very nice today. That's the high from January 13th. You'd like to be able to see it take out that swing point with volume. I don't know that will happen. That's 161,000 contracts up at that level. Today we've done 57,000 contracts here. But the retracement, when we take a look at coming off of the low out here from December 31st to the high that was put in on January 13th, what we'll see is gold has not even done the .382 retracement here. At least it has not done the .382 retracement as of yet, as we speak at the moment out here. So that is that's a nice bullish little sign out there. And if we take a look at gold, let me see, I probably have some other daily charts out here, or weekly charts. Where is it? Here's the weekly chart. So if we take a look at the weekly chart here on gold, getting into that above that 1255 level, really it's probably more like 1267. That'll start to really raise some eyebrows. Now, this is the weekly chart that we're looking at for gold here, and you can see that important descending price channel that it's trying to trade up into. We're going to find out whether that becomes a resistance area or whether or not that is where we see the space shuttle of gold truly take off to the upside out here. So we'll be paying attention to those areas for sure. If we take a look at silver here, we take a look at high-ho silver. That broke its descending price channel. That's the daily chart that we're looking at on the screen here. So silver also. Now silver here, has been a little bit weaker than gold. And what silver has done, it's made the 0.382 retracement. That's all that it's really done off of the lows here from December 31st to the high that was put in on January 14th. So if silver could somehow close above $20.67, don't know that it'll do that today, but boy, if it does, that'll be that could be setting up a huge A to B equals CD up pattern out here, especially if we're to take it out with volume. Now, volume up there, 36,000 contracts. So far today, 17,000 contracts. So not necessarily a likely move. But I'm telling you, these charts here, folks, I don't care what it is that you hear on the stations that are following the markets. Technical traders are paying attention to these trend and channel lines that are being broken here inside of the metals out there. So, it could go from 0 to hero pretty quickly out there, and that is in gold. If we take a look at light sweet crude here right now, let's go see what crude oil is doing. Light sweet crude has made the 0.382 retracement. That's off of the last leg down. That's the leg off of the high from December 27th. At 100.75, down to the low on January 9th at 91.25. So it has made the 0.382 retracement, which was $94 and change, $94.87 to be exact. So far, intra-session high, 94 at 94 out here. Nice bar, nice action on January 15th, 243,000 contracts. A little bit of a high wave-ish type candle. Yesterday, that's not a good sign because that says it's lost its way. You don't want it to lose its way when it's heading up to the 0.382 retracement level. You want it to kind of get up there with conviction and pull back and then make its way up to the 0.618 retracement, the normal level of any move, which would be $97.12 out there. Let's go take a look at some of the spider ETFs out here. We haven't looked at that for a while, so let's go take a quick peek here. Let's take a look at the XLF, the financial sector. I think that's about the second weighting inside of the S&P 500. Not really any damage here. The XLF on January 15th, nice little breakout there. Gap up with volume. 61 million shares, getting above a swing point with volume, which was January 9th. That had 29 million shares. So it's got this little area of support here that it has tested. Looks like 2 days worth of testing out here. That's the low. This is where the gap is your friend out here. Don't fear the gap out there, because if you're fearing the gap, what you'd really be saying is that this candle here on the trading session of January 15th, you'd say, boy, I'm scared of that because of the gap. Whereas you would really also be saying, but you know what, Steve-O-san, I wouldn't be afraid if it had looked like this. Yeah, I color it in now. And this is where I want you to really use gaps as your friend. So now what you're really saying to me is that if the candle had looked like this, which means a little bit wider ranging bar, and you would see here no gap, right? You would say, boy, that looks really good. That's really strong. Wide ranging bar, kind of like a numero uno on the strength meter out here. And so you see the difference? So fill in those gaps out there. And I don't mean fill in those gaps as in all gaps get filled. Use gaps as your friend. Now, how to use it as your friend? Well, they should become strong support areas. And what you like to see is you like to see those areas get tested. And you like to see them get tested on lighter volume. So we take a look at the session on January 15th, up with 61 million shares. Yesterday, back with 47 million shares. Tested the bottom of that gap, and it held. We haven't seen another test. You like to see 3 tests of that area. And if that holds, that says, hey, that's a super strong window out there, and that becomes your support level. Hey, that's support level 1. Support level 2 is really the top of the gap, which is January 14th out there, and that's a high of $21.91. But so far, so good when we take a look at the XLF. Let's go take a look at the XLF. I haven't done this here for a while. Let's go over. I need to go visit these charts. They're probably saying, hey, you forgot all about me. I know that that's what they're saying. Here's the weekly chart here for the XLF. Now, the XLF looks a lot like the ES Mini in that we are trading right about where we opened on Sunday evening. So We've gone on for 5 full days here, and basically we've done nothing. Not we, but the market. And that's really what the XLF has also done here. And you can see on a weekly chart you got what is, close to 2 dojis in a row out here. So that's not necessarily that says you've got, here's how you take a look at it with regard to that. Now, the candle from last week does not qualify as a doji candle out there. It's a little bit too much body. We call it more of a little bit of a spinning top more than anything else. But if this week here, the XLF were to go ahead and close out at 22, open at $22 or 22.01, it closes right here. Now you've got a doji. That says that the high from this week here would be your resistance area. Close above that would be positive. And says, maybe it's losing away. But the daily chart looks pretty good. Volume here on the week so far, 188 million shares here. That was really through yesterday. Last week we did 183 million shares. So the XLF looks pretty strong here with inside the S&P. And so on the next real bounce in the market, after a little bit of a pullback, the XLF is probably one of those places that you'd want to look right now versus, let's just say, the S&P 500. Now, how do we know whether that's the case or not? Well, I don't know. Let's go take a look at the technology sector. Maybe the technology sector is the place to hang out, the XLK. So let's go see what the XLK looks like on a weekly chart as long as we're here. Hey, this doesn't look too shabby at all. XLK, let's see, volume from the trading swing point of January 3rd, 25 million shares. You're really up above that right now with 29 million shares, so that's a nice positive out there. So that's good. You've got this little, here on the weekly chart, we have got this gap, right, from December 20th to December 27th out there. So that gap has been tested. Let's draw the line across the screen here. Let's do a red line for that one. Let's do a black line for support level number 1. That's going to be right here. So we're going to see if we got some strong support in technology, and we do. We really do. So the technology sector, the XLK, looking pretty snazzy out here. Because if you take a look at the gap up from the week of December 27th, the low of which is 35.20. Now, volume there was 17 million shares. You came back and held that with 25 million shares. That was the following week on January 3rd. It tested it with 35 million shares, closed above it. This week here, you've tested it so far, 29 million shares and closed above it. Not too shabby. 46 million shares was the volume on December 20th. So we haven't hit that kind of volume out here yet. So XLK and the XLF, not looking too bad out there. Dow's off 9 points, S&P down 5. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Kind of a flat-ish type market with the exception here of the NASDAQ composite. It's down 15 points, so it's leading the charge here. NASDAQ 100 as well, off about 0.5% here. New York Stock Exchange down about 0.25% off 20 points. Now, if we take a look at the NQ, the 30-minute chart on the NASDAQ, what we can see here is a little sideways consolidation that it is trying to break through right now. That consolidation pattern just really over the course of since the last couple of days, January 15th, so the last 2 days out there. Nonetheless, breaking that area says that this measured move down should take us to about the price level here of about 4 o'clock in the morning, January 15th, right around the area of about 35.8250 out there. So another 5 points. You can see it's also starting on the 30-minute chart here, starting to get down towards that oversold-ish type level. I would suspect that what we'll see here is we'll see this, we should see this area here hit some support. Of course, it's going to need some help from its friends, one of those friends here being the Euro-Japanese yen. We took a look at this pattern here yesterday. Now, this was the intraday chart. This was the nice 0.786 Gartley buy pattern that it had formed. Did it with a beautiful hammer candle out here. That was right at 10 o'clock in the morning. We came back and looked at it right during the open of the Money Masters show out there. Of course, as you know, we always wait for confirmation. We did not get that confirmation, and that's why we wait. That was on that very next trading session. Closed below that hammer candle. And that hammer candle here, now, when I say a 0.786 Gartley pattern, when it fails, it turns into a butterfly, it means it doesn't just hit that area. It means that it really does hold. And when you hit that with a hammer candle, that's good enough for me. That should be that's your strongest individual candle signal, one candle signal out there that you can have. And that failed. And, of course, that then set up the projection of the 1.272 butterfly. And that takes you to where? That takes you to 141.48. Well, guess what we actually hit here as we came into the session here at 9:30 this morning? We got down to 141.48. You got to like how that works, don't you? Now, what's also occurred on that 30-minute chart here is the mere fact that it was moving into that little over sold territory. And it did form a little bullish engulfing candle right here during the 9:30 session. Now, we'll see if we get some confirmation. If we get some confirmation, that just simply means a close higher. Then the butterfly pattern, in essence, may have formed out here. And if we don't get confirmation, meaning we don't get a higher close, that brings into play the 141.10 level. That would be your 1.618 butterfly pattern on the euro yen. Of course, if we take a look here, this is another thing that you want to do, and there is no price relative strength divergence, but if we come all the way off of the low here at 2 o'clock in the afternoon on January 13th, up to the high that was put in here recently at about 11 o'clock in the evening on January 15th, you'll also see that where price is up against right now, pretty close to the 0.618 retracement. So I would say if we don't get a confirmation here, which right now we don't, we've got 3 more minutes left in this session here, what this says to me is we ought to see the euro-Japanese yen move down to about the 141 to 141.10-ish type level out there. And so, watch that pattern as it's completing along with the NASDAQ out here. That's assuming that it can actually bust through this consolidation. Now, if it doesn't bust through this consolidation in the next 3 minutes, well, if you can't bust them down, that means it'll try to bust them up, and it'll go all the way back up to that 36.08 type of level out there. Inside the NYSE, what you want to be watching for today, if by any chance the market starts to really crater here, go back and take a look at the net advancing issues. Of course, if it's cratering, that means it's really net declining issues. If you see more than 1,484 net declining issues today, that says the bears decided to take control of the market before this nice 3-day holiday weekend. So be safe out there, folks. Stay warm. We're going to try to do that here in Florida. And stay tuned. The Nadex Bull Bear Binary Option Hour is up. Thanks so much for joining me this week. I look forward to seeing you first thing Tuesday morning. Take care, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.